Hilton rising alongside post-pandemic travel demand, with investors hoping it can keep that momentum going. The hotel chain out with earnings this morning with a rise in its occupancy rate cheering investors. Here with a closer look at earnings, Kevin Jacobs, Hilton CFO, and Yahoo Finance's Brian Sozzi. A big welcome to you both here. I mean, when you compare where we were in 2019, Kevin, I mean, growth across all segments now. What do you attribute this to?
Yeah, I think we just attribute, well, first of all, thanks for having me on. It's great to be with you guys again. I think, you attribute it to demand, right? I mean, I think there's tons of both pent up demand and just generally demand for travel in the world. And, our products are, we have great products that are in high demand with customers. So as you mentioned, yeah, all three of our primary segments, leisure, business, and group, are now ahead, in the fourth quarter, we're ahead of 2019 from a revenue perspective. And I think what you've seen is, this has been a very leisure-driven recovery, particularly early on in coming out of the pandemic. So leisure travel remains really strong, but now business travel is also ahead of 2019 levels, and group demand, frankly, is, at this point off the charts. Our lead volume so far in January, for leads for potential new corporate meetings and other groups is at all-time highs.
Kevin, let's just stay on January. How did January look from a revenue per available room and occupancy perspective?
Yeah, we didn't, Brian, we haven't given specifically January, but what I would say is the trends that we saw in the fourth quarter have continued, right? We're not seeing any, we talked about on our call earlier, we're not seeing any cracks in bookings. Now, everybody needs to keep in mind our bookings are relatively, I'll correct myself, very short term in nature. And so if something happens in the broader macro environment, that can turn very quickly. But at the moment, we're seeing continuation of trends into January that we saw during the fourth quarter.
Kevin, I had another CFO on this morning reporting earnings. That's Hugh Johnston over at PepsiCo. He said his base case this year was a mild recession. Are you in that camp too?
Yeah, we are. I think only because we're typically, the way we think about it is we're not economists, right? So we're not in the business of predicting the macro. We tend to forecast and give guidance based on what we think is, consensus view of what's going to happen in the economy. And I think consensus view at this point in the U.S. is for, a slowdown / a mild recession in the back half of the year. And that's the same thing that our current guidance assumes. And that's not to say that, we don't think it could be better or worse. We tend to assume what everybody else assumes or the consensus view of the economy and then go from there.
And one of the themes we've seen this earnings season, a lot of companies trying to be leaner, but you're also in the middle of launching your premium economy brand, Spark. Talk about the timing of that and the sort of market share you're hoping to capture.
Yeah, sure. Well, the good news is we can do both, right? We've been very lean, and we're still running at an expense base that is well below 2019 levels. I think our guide for G&A this year is to be sort of circa, low double digits below 2019, and that's obviously with 4 years of inflation that have happened since then. And then in terms of launching a new brand, yeah, Spark by Hilton is our 19th brand, the 10th brand we've launched, in the last 15 years since the Blackstone leverage buyout and the new management team took over. We're incredibly excited about it. It's what we're calling a premium economy offering. We think that there's a room in, we think there's over 70 million consumers in the U.S. annually who use an economy product, and we think there's room for a very high quality product in that space. It'll be 100% conversions from other brands, and we think it'll be our most disruptive brand to date. So we're incredibly excited about the growth prospects for this new brand.
And something that a lot of has also been mentioned on calls, we look at what's been happening with the strength of the US dollar, some of the currency concerns and how that's been affecting earnings as well. What's your take on that and how you've seen that affect your business in different parts of the world?
Yeah, look, it's definitely been a fuel, a headwind for travel for people from the U.S. going into other parts of the world, particularly in Europe. It's not the only reason our European business has been quite strong, but it certainly helps. And in terms of how it affects earnings, we're a big global business, and we've got puts and takes in currency all over the place. Obviously, we're a U.S. business, so we give, our earnings are based in U.S. dollars, but we have a very small headwind in our numbers this year from foreign exchange. But it can be, in terms of the way it affects demand patterns around the world, that's one of the beauties of having geographic diversification. At times it helps, and at times it can hurt a little bit.
Kevin, do you see China returning to growth within the first half of the year?
Yeah, we do for sure. I mean, I think as China has opened up, you've seen a little bit of a drag in terms of business activity in the fourth quarter, because as they've opened up, they've had sort of a spike in COVID cases. And, I think a lot of other people think this too, but we think they'll get through that. And we think you'll see, just like you've seen in other parts of the world, there's going to be a ton of pent up demand for travel. And once people in China can start moving around again, we do think that Asia Pacific and China in particular is going to be a big headwind for our results this year, for sure.
Certainly a lot of companies banking on that. We hope it works out for you as well. Kevin Jacobs, Hilton CFO, and of course, our very own Brian Sozzi. Thank you both for joining me this morning.